All right, guys, good morning. Happy Tuesday. Feels like a Monday. We got a short trading week this week, and we're going to do a couple of live streams during the trading week this week. There's a couple spicy things going on. Bitcoin is back up over 110,000. GameStop pushing up in early trading minutes here. This morning on Tuesday, it is up almost to $35, $34.90. Markets in general, liking the Trump tariff news regarding Europe. We got the Dow, the S&P, and the NASDAQ all well in the green so far this morning here at market open. And let's take a look at a couple of other tickers here. AMC pushing up about 5.5%. It is at 343. We'll have to see if that holds. The other cinema stocks also all up. IMAX, Cinemark, and Marcus. I saw a tweet from Adam Aaron today talking about record weekend, record attendance. As someone pointed out in the Discord, a lot of people discount box office records saying, yeah, but inflation. But if we're setting record attendance levels, that is not impacted by inflation. So just something to keep in mind. I don't judge a quarter on one weekend, but it is good to see press releases like that too. And I expect the other movie companies will be releasing them as well. Just to remind everybody that the movie industry is not dead. We just need good movies. I did spend some time this morning going through and updating the Q2 forecast based on the latest box office numbers. And as we know, Lilo and Stitch and Mission Impossible are outperforming. Sinners was outperforming as it's winding down. And what else? The Final Destination movie already beat my whole domestic run forecast by $20 million, so that's good. A lot of movies are beating. Karate Kid coming up in a week or two. That one is losing a little bit of steam, so I downgraded my expectations for that one. And Ballerina is also a big one coming up, and that one is still a little bit iffy. Also, they're holding the movie reviews on that until the day before previews. I don't think there's any movie reviews out for Ballerina yet. And typically when they're holding the movie review embargo date, that's not a good sign. So we'll see. I'm still going to go see that movie. But in general, the box office is looking really good. And I'm still pretty confident about a 2.8-ish Q2. 2.8 billion. Anya, good morning. Chris, how you doing? Let's check back in on GameStop. Over $35. Bottom left quadrant here. On our 5-minute chart, Bitcoin popped up on the 5-minute to almost 111 before pushing back down a little bit. MSTR up 2.5% today as Bitcoin recovers a little bit. And a couple of the other meme stocks that the retail traders seem really interested in right now. Let's take a quick look at those, and then we'll look at gold and silver and junior miners. Meme stocks here I have. Nixie, it's up 1%. I'm not in any of these stocks, by the way. Finger down 1.5% at $4. G-Bucks, another stock getting pumped by the promoters. Why? I don't know. I think their revenue's in the range of $19,000, but for some reason people think that there's hundreds of billions of naked shorts in this stock. And Wolf over here on the right are leading candidate for potential bankruptcy. Hopefully not, but I was having some discussion with people in the comments this morning. Oh, Tony, you're only providing bad news. This is a bad take. Guys, I'm just reading company filings. If you don't like the news, don't blame the messenger. All I'm doing is reading what the company is presenting so that people can properly assess the risk, because all I see is people promoting the very best possible outcomes, which require basically a miracle at this point. And hey, I hope that miracle happens on Wolf. Someone asked me, why didn't you make videos about the Carvana bankruptcy when all those rumors were going around in 2022? Carvana never issued a going concern warning. Carvana didn't have pages of liquidity warnings. Carvana had a sales problem. They had a debt problem, but in their communications in the company filings, they said, if sales turn around, we can turn this thing around. The press and the bears had different opinions, but the company in its filings, it's night and day difference than what we see in a Wolf. And if I had seen a going concern warning from Carvana at the time, I probably would have said something about it. To me, they're not the same. Someone asked, what else? Does Apollo really want to take over Wolf under these dire circumstances? I don't think Apollo wants to take over Wolf. I think Apollo wants to protect their financial interest, $1.5 billion, and they're going to take whatever steps that they need to take to protect that interest. And if that means forcing a out-of-court settlement or prepackaged Chapter 11 or in-court normal Chapter 11, they're going to do what they got to do. Hopefully everybody comes to an amicable solution, but unless a white knight comes in, I don't know that a restructuring is avoidable for Wolf. And what else do I want to say about Apollo? Bye. I love you. Have a good day. Let me see what other good discussion we had going on here this morning on Wolf. Oh, their Japanese customer. I don't even know how to pronounce it. Is it Renesas? They signed a 10-year deal with Wolf back in 2023 for deliveries starting in 2025, and they fronted Wolf $2 billion. So they are a $2 billion unsecured creditor if there was a bankruptcy. They're not a lender to Wolf. They would be impacted severely if Wolf restructures. So some people are hoping, guessing that this Japanese company kicks another $1 billion over to Wolf. Maybe so, but part of the reason Wolf is struggling is because demand is slowing down and competition is increasing for their products. And so that is, under those circumstances, would Renesas drop in another $1 billion to prop Wolf up, or do they look for other suppliers to mitigate their risk? These are just, unemotional things that we need to think about, not have a confirmation bias that everything is going to go perfectly. I'm not saying everything, is going to go the worst case scenario either. All I'm saying is be able as an investor in any trade to assess all of the risks in a logical way. Someone asked me, they wouldn't dare file a restructuring because they have this $10 billion customer. That discussion is going to happen based on their financial statements, their liquidity, and their cash flow projections, and that discussion will be solely between Wolf and its secured creditors. And Renesas is just kind of it's an interested party, but they're not driving the discussion. And then the other question someone asked me, what about Moelis being hired by Apollo? Isn't that evidence that they were brought in to avoid Chapter 11? I would say Moelis was brought in to protect Apollo's interests by whatever means necessary, coming up with a creative out-of-court restructuring plan, coming up with a prepackaged Chapter 11, or saying to Apollo, sorry, let me drink some of my tea here, saying to Apollo, hey, there's no deal that's going to be made here, and we need to force a Chapter 11. They were probably part of the impetus to get both parties to agree to put off the interest payments for 30 days. That is helpful to manage cash flow and give, an extra 4 weeks of breathing room while everybody tries to figure out what to do. But I don't necessarily, like the promoters of Wolf want to think, that Moelis coming on board is evidence that everyone's trying to avoid Chapter 11. I would strictly view it as evidence that Apollo hired someone to help protect their interest. What the outcome is, I don't know. I'm just telling you that I am not going to sit here and ignore risks. We're going to do the uncomfortable talk and talk through everything. APD, what's going on? He says, my cost basis just went up from what it was. What ticker are we talking about? Let me go. I bought more stock at a way cheaper price. Yeah, let me know what ticker we're talking about. Wolf now down 6% this morning. Was there any new news? No. Let's just check in and see what the current cost to borrow and short interest is on Wolf. AMC, he said. Cost basis went up. I would check. Do you still have the same amount of shares? They didn't unload some shares on you, did they? Or the other thing that could have happened, like someone said, Anya, if you recently sold some and then bought back, you might have had a wash sale, which would increase your basis. So it's hard for me to answer without knowing the details of your trading account, and I don't really want to know the details, but those are some things to think about. Short interest on Wolfspeed is 43%, which is why retail is interested in it. Despite the risks, if they were able to fix this, you could get a nice little run up. 43% short interest. If Wolfspeed pulls a rabbit out of a hat, that could be interesting for long players. Not my type of play when a company's got a disclosed current going concern risk, and looking at their financials. I can find safer trades for my money. But good luck to you if you're in it. I have no position. I'm just reporting on it, and I love watching these bankruptcy plays for my own education and yours. We'll find out, I think, in the next month whose DD was correct, and mine is just a guess. I'm just guessing on outcome, reading company filings. I can't say anything with certainty of what is going to happen. The borrow fee on Wolf for the shorts right now, 55% this morning, down from 93%. There is a negative 50% rebate. That is an effective borrow cost of 100%. So a substantial fee to go short on Wolf. And what I have learned to ask myself, why are they so willing to go short? Am I so smart that I am better at reading DD? If I were long, am I so smart that I'm better than these multi-billion-dollar shorts that have the best and the brightest financial whizzes hired in algorithms and analysis. What am I just seeing stuff that they're all completely missing? Or maybe should I dig a little bit deeper to see why they are so willing to go short? That's what I've learned over the last few years, to ask myself, to be honest with myself, to do a non-emotional take when something is being heavily shorted. Not just to say it's illegal, it's manipulation. It might be manipulation. It's definitely a bearish bet. It's definitely affecting the price. I would bet you also the bondholders of Wolf are part of the shorts because they are hedging their bond position. Very common bondholder tactic when a company starts getting in trouble is to start going short the common. A lot of moving parts here. And it's going to remain anybody's guess until we hear official news from the company. Anya, no, I am not smarter. It was a rhetorical question. I am not smarter than dozens of institutions with hundreds of Harvard and Princeton grads, CPAs, MBAs. I'm not smarter than them. I've learned to humble my DD and try to think like they think. Like, what are they seeing? I can have a different opinion, but I must give some weight to their opinion. Why are they going short? And in a bankruptcy play, the why is very evident. It's just going to come down to, I think, for Wolf at this point, do they pull a miracle or not? So that's a very speculative play. If you look at the financials and the risk factors, it's not looking great. Timing of the tax rebate. It's going to come in fiscal year 2026. A lot of people are saying, what about that $600 million tax rebate? Okay, yeah, it's probably coming, maybe. Depends on if the Trump administration stalls any timing of those tax refund distributions. So there's that uncertainty. And there's also the timing. Like, what quarter is that going to hit? Is it going to be 6 months from now, 9 months from now, 12 months from now? Let's assume that it's 6 months from now when Wolf begins their fiscal year 2026. Timing-wise, is that soon enough for them? Or are they going to run into liquidity issues and creditors breathing down their neck before they get that tax refund? I think, it's very dangerous to just look at a headline and not think through things like that, like cash timing, cash flow timing. Trend board, good morning. Let's go back and check GameStop. Got bounced back down now from 35.65 to 34.25. Sorry we got cut off last night in the live stream. We were having some good chats about AMC and GameStop both. Hopefully you guys were able to catch some of my thoughts on that last night. I also published a video this weekend going over some thoughts on GameStop. A couple of good questions were brought up in the comments on YouTube and in Twitter, which I meant to talk about in that video. I just was in a rush to get it out and I forgot to bring them up. One of them was, could Ryan Cohen raise more money if the price keeps going up? That is an excellent question, whoever asked that. It's something that we've been talking about all weekend, the past 3 days. And my general belief is companies are going to do what is in their benefit. Their prime directive is to do the best for the company with the expectation that over the long term that will benefit all stakeholders. That means that if the stock is trading 3 times its fair value, that it might be a smart move to raise some more money, either through issuing more shares or selling more bonds. So the higher GameStop goes, I think that probability of the company raising some more money, either through equity or bonds, is increased. But the thing that I don't know is, what is GameStop's strategy with the cash? Do they think they have enough now? Do they think they need more? I don't know those answers, and they have not been very forthcoming with answers, so we're all just left to guess. And I would say, you know, that probability that they could raise some more money exists. I can't give you a number on the probability. You're going to have to come up with your own. I have mine. It's probably greater than 50%, but I can't say at what price point GameStop would pull the trigger on that. And I can't even say that it's a certainty. But if they did that, it would probably have some temporary negative price impact on the common stock. Overall, you know, for GameStop in the long run, it would be a good play, a good idea for them. And I don't think they're dummies. If the stock is overpriced, you sell shares if you think you need more money. Couple of ifs there. And it is overpriced. Do they need more money? That is the unknown. That is up to them. I have no way of knowing that. Robert says, anyone who buys GameStop at 34 will be regretting it when the price comes back down to 25. I will tell you, Robert, that I started taking profits off on Friday as GameStop crossed 33, while also telling my Discord that there could be some additional price movement up. Like, I'm not perfect at calling the tops. We already got almost $36 this morning. Could we see 40, 60? I don't know. But I'm already up 50% on my buy-in early April at 21.35. And so for me as a swing trader, that's a smart time to start peeling some profits off. Because who could predict what GameStop's going to do? Who could predict what Bitcoin's going to do? Profits in the bank is a certainty, and I like certainty. And you know, I can always jump back in if the train looks like it's gonna go off the tracks in a good way, you know, up to 50, 60, $100. I could roll some of those gains back in. I kind of wanted to see what happens this week with Bitcoin and GameStop. So today for me is kind of a day of observation. Someone also said in the comments, Tony, you did not buy in April at 21.35. Like, I have no reason to lie to you guys. There's been plenty of, I've posted all of my trades on GameStop videos over the last several years. If you go back and watch them, you can see all of my trades on the chart. I post them in the Discord the second that I do them for accountability. I have trading receipts. There's no benefit of me to lie to you guys. Also, there's been lows on GameStop that I've missed, like when it dropped all the way down below $10. I don't think that I got in at the absolute bottom back then. So, you know, it is what it is. Sometimes I get the bottom, sometimes I don't. 21.35 was a good buy-in point for me based on it hitting this demand zone, and that's why I put these up here and show them to you guys so you know, kind of know where I'm targeting to do my buy-ins. Let me pull up the GameStop chart. And this goes for any ticker. When you see me putting up demand zones, those are there for me to kind of show you without saying, you know, I don't want to induce people to trade a stock, but I want you to kind of get in my mind and see what I'm looking at. If we can bounce or hold off of this demand zone, for me, that's a entry signal. And I will start loading as a ticker comes into this demand zone. I won't go all in because sometimes they drop below, and then I increase my buy size if I really am a believer in the company. But I didn't get a huge position here because it didn't drop down, but I most definitely bought at 21.25, and I most definitely was up 50% on Friday. I have no reason to lie to you guys. People just, you know, the GameStop elitists don't want to believe that someone can trade GameStop and make 50% and lock in gains in less than 2 months, because they've been holding for 4 years and they're up 7% or 10%, wildly, you know, maniacally trying to average down from positions they bought 4 years ago. I don't think GameStop's a bad investment, but I think there is a great opportunity to swing trade it for much greater profits than just buying and holding forever. That's my trading plan, and you can do whatever you want with yours, and we can still be friends. Trade Board says, what do you think about MicroStrategy infinite money glitch? It's definitely an interesting strategy. I'm going to start doing a little more coverage on MSTR. Someone asked me about a lawsuit on MSTR. Like, I'm behind on my DD. Apparently, I've got some homework I need to go do after we finish up this live stream on MSTR. I'm vaguely aware of the general headlines and keenly aware of the price action and what they've been doing, but I don't have the details on any lawsuit regarding MSTR. Generally, we're bullish on Bitcoin over the long run, which is one reason why I'm bullish on GameStop for the long run, if they bought in. There was some additional discussion about disclosures. You know, what is the material impact to GameStop? And I think Kevin Malone, he was quoting some SEC rule that said it had to be over 5% of their assets or cash balance. I don't know. I know from reading I did back in late March, early April, is that my belief is GameStop is not required to document to the public every single buy of Bitcoin that they do. But if it was a material purchase, maybe. I'm not really sure. I'm not sure if Kevin is right or not. And we'll all find out here in, 10 days or so, and we get the 10Q. We'll find out. Did they buy 50 million worth of Bitcoin, or 0 or $1 billion? And then we'll know. We'll know what the SEC rules are, because they know them better than me. And at a minimum, we know that they have to report it every quarter. That's the minimum. So we'll get some update, but I'm just going to say I don't know the exact correct answer. And anybody could be right. Kevin could be right. The people that say GameStop hasn't bought any Bitcoin could be right. My leading belief is they could have bought a substantial amount and not be required to report it. And I could be right on that too, but I don't know. We'll all find out soon enough. Hazel says, Tony, do you think KOSS is in the squeeze basket? I keep looking at KOSS about once a week. Not a whole lot of exciting stuff company-wise going on at KOSS, but there is exciting stuff going on price-wise, right? I keep on looking at KOSS and going through their financials and their press releases. And I'm like, what am I missing on this company? What the PE ratio is negative. Market cap is 56 million, not huge, not a huge market cap. Free float is small, 5 million shares. So it is easily, I'm not going to say manipulated, but it is easy to change the volatility on KOSS depending on who's showing up on any given day, buyers or shorts. Let's look and see what the short interest reported is on KOSS, because it ran up a year ago from 227 to 1873. I'd take that all day long. You bet I wish I was in some cost, but I'm not. And it's still trading at $6, which to me seems overpriced if they're not making a profit. But let's see what the short interest is. Only 2%. It does not appear to be heavily shorted. Now, back in May, when let me put this up on the screen here, top right. Back in May of last year, when the price skyrocketed, you could see the shorts came in and shorted it, and that's what we expect. The higher the price goes, the more shorts come in. And then they were able to drive the price down from $18.73 back down to $6, and they started closing out their shorts. And we're back down to 2%. And the other thing that I just checked for my own sanity is, what is the cost to borrow? I don't know. Let's see. 1%. Yeah, there's no shorts in this play. If there was, there would be a high short interest and a high cost to borrow. So I don't think that it is in a short basket. But I do think that it is in a retail basket, and people view it as a signal. People pile into the stock when things get exciting because it's cheap. But it appears to me to be overpriced, and it does not appear to be particularly targeted by shorts. Let's see if there's any analyst price targets. Not even anybody covering this stock. I don't know. I mean, I haven't bought it for a reason, because it's super speculative. Like, what are we really gambling on here? Revenue is generally declining to flat. Operating income negative for the last 3 years. Net income negative for the last 12 months at least. Not doing a lot of dilution. I think they have plenty of cash. We'll check that in a second. Gross margins are positive, but operating margins and profit margins are negative, and free cash flow is negative. So, you know, for me, not a really interesting company to own, a risky company to own. Cash and cash equivalent, 2.93 million. What's their operating cash burn? Almost nothing. $150,000. They got plenty of cash. So that's why the shorts aren't really interested in this play. This company's not going bankrupt. They have runway for decades, at least years. They could lose money for many years and be just fine, from what I see here. Let's see what else we got. Trimboard says, if everyone does the same thing as Michael Saylor, it won't work anymore. Yeah, you saw the announcement from DJT. What did they say? They want to establish a $3 billion Bitcoin treasury. I'm going to dig into that one a little bit more today and probably put a video out on that, because I want to know, where are they going to get the money for that? I'm assuming what? They're going to sell bonds or dilute. And yeah, more and more companies are jumping on board this trend to become Bitcoin holding companies. And your question is, if everybody starts doing it, won't work anymore. I kind of think that if everybody starts doing it, it's going to drive the price of Bitcoin up, which is good for everybody that's already established. It's good for Michael Saylor. I don't know how it will work out for everybody else, but I am generally bullish on Bitcoin over the long term. So I think it will work out okay. We were having a talk this weekend. Rolf was talking about the Bitcoin cycles and crypto winter. Are we nearing the end of a cycle? Are we about to go back down for, crypto winter? That's another topic worth looking into. And I'm sure there's wildly varying opinions on that. I don't have a strong one at this moment. I'm not trying to predict Bitcoin from month to month. I'm trying to look at it on like a 10-year horizon. And on that horizon, I'm generally bullish. And if it gets cheap, I like to be a buyer of Bitcoin. So if it craters, that's fine with me. But all these companies loading up on Bitcoin, it would not be good for them. Hopefully, you know, you get more and more companies buying Bitcoin as a treasury asset. Maybe things change this year in the cycle. Maybe we don't get a cold winter. Hazel, what do you think about KOSS? Does my analysis seem reasonable? I'm trying to just be unbiased and look at it from the outside here. I have gone back and looked at it over and over and over. And just for me, for my risk style, I'd rather play GameStop or AMC. KOSS is probably safer than AMC at this point, but AMC has the speculation of increasing box office. What does KOSS have? KOSS has safety in their balance sheet, safety and very low operating cash burn, but they don't have really any, they don't have any catalyst of growth. And that's what makes, even though AMC is risky, that's what makes AMC an interesting play. GameStop has no catalyst for growth either on their core business, but they have potential catalyst of what could they do with $6.5 billion. That is very interesting to me also. There's a lot of potential for things to change on one overnight announcement from GameStop. Still a speculative play at these levels, but it's up here for a reason. It's at $34 for a reason, because people are speculating on what they're going to do with all that cash. The cash itself does not derive a $34 price target. Cash sitting on the balance sheet is not worth more than about $13 a share. But the potential is what people are speculating on, the potential to convert that cash into return or earnings. And I'm not talking interest. I'm not talking 4% on treasuries. I'm talking about real earnings. That is what's got people excited about GameStop. And I think that's a reasonable speculation for people that are aware of the risks and manage their exposure accordingly to whatever they're comfortable with. Trendboard says, as bizarre as it seems, there's no reason to believe MicroStrategy glitch will stop to work even for other companies. I generally agree with that assessment, Trendboard. Anyone can do it and it will work as long as the laws are the same in the market. Yeah, and this administration seems to be favorable towards Bitcoin, which is good. I'm not predicting any short-term major correction in Bitcoin, and I love to see it up here. It surprised me, honestly, getting up to 110, 111 as quickly as it did, considering just a few months ago we were at 74, but I love to see it. Trendboard says only a regulator could stop this. Do you see any regulation under the current administration that is concerning to you at all, Trendboard? All right, we got a couple of tickers. He's saying no. All right, I agree. Let's look at a couple of other tickers before we wrap up here. Got about 15 more minutes. ANLDF, Anfield Energy. Let's take a quick look. I like ANLDF. I like looking at these just because it's a good mental exercise to see what you guys have eyeballs on, and just me coming at it fresh. What do I see? We have a company with a market cap of $95 million, free float of 735 million shares, negative earnings, it looks like. And going back historically, what do we got here? We go all the way back. I'm not going to go back that far. 2017. I mean, it was. All right, let's find a point where it was trading over $1. I don't normally even report or entertain penny stocks, just so we're clear here. But this thing hasn't been over $1 since 2017. It's trading at 8 cents right now. I guess I'm going to move on to the next ticker. Let me know in the comments, though, what you like about this ticker. I see a generally downward trend and no profits. So what's the thesis on ANLDF? The other one people are wanting to look at, Big Bear, BBAI. High of $16 back in 2022. It came back up to $10 in February, currently trading at $4. I got to remind myself what BBAI does again. AI, company offers national security, supply chain management, and digital identity biometric solutions. All fine sectors to be involved in. AI is hot right now. Provides data ingestion, data enrichment, data processing, AI, machine learning, predictive analysis, and predictive visualization services. All right, sounds good. Company was founded in 2020, headquartered in Virginia with 630 employees. And let's take a look at a couple of other things here. Revenue has been generally flat for almost 4 or 5 years. Operating income negative since 2020. Net income also negative and getting worse. Earnings per share negative, obviously. The float has been more than doubled since 2021. So they've been doing dilution to try and stay afloat. Gross margins are positive, but the operating and profit margins are pretty bad. Profit margin negative 143%, free cash flow negative. Not a lot to like here unless you have a story that they are on the verge of a massive turnaround. 100 million in cash on the balance sheet. Operating cash burn 30 million. So they got what? Enough, it would seem, just looking at those two data points to last couple years. Let's keep digging here real quick. Current assets 148, current liabilities 89. They're okay on working capital. Most of their current assets are cash and receivables. That's good. Total assets 396 million, total liabilities 198. So the balance sheet is not upside down. That is good. Long-term debt 100 million, about equal to the cash they have on hand. So total debt 111. Tangible book value is negative. I mean, it's not the worst balance sheet I've seen. Not a whole lot I can say bad about it. I would say it would lean to the positive, but the problem with BBAI is income and and operating profits. Operating cash flows have been negative since 2020. And let's look at when is the last time they sold stock. Recently, 67 million in the last quarter, 55 million the quarter for that, 50 million the quarter for that. I don't know. You got to sell me on a turnaround story for their income. I see apparently some law firms are targeting the company for fraud. That, I mean, those can be ambulance chaser type lawsuits. I haven't read any of them, so I can't really comment if they're legit or not. I don't know. It's not a strong green light for me on BBAI. Devron, what's up? He says, can we look at AMC again? Yes. Yes, we can. I am excited about the box office. Apparently the market is too. AMC's up almost 9.5% this morning. Beautiful. 355. Cinemark is up 2.5%. IMAX is up 2.89. Marcus is up 5.6. AMC, we would expect it to kind of outperform some of these other more stable competitors just from the standpoint that AMC is heavily shorted. Although let's check in and see what is the most recent short report on AMC. 14.5%. I would prefer, for me to start talking about AMC being a short squeeze play, I would prefer short interest to be over 20%. So you're not going to see any short squeeze videos for me on AMC because my channel rule is short interest must be over 20%. However, you can have some nice little short covering even at 14.5% if the news gets bullish enough. And that's probably what is driving the price up today, 9.5%. Probably a couple people saying, well, shit, this quarter is not going to be the bomb that we thought it was. Let's go ahead and close our short and, take a look again later, or take a look at again if it runs up. Maybe we can come back in. I think this quarter is going to be great. I think AMC is going to make a profit in Q2. I think box office is going to come in around 2.8 billion. 3 billion is not out of the realm of possibility, but I think for me right now, 2.8 billion is a reasonable number to put on the dartboard as my guess. Would I love to see higher? Absolutely. We've modeled out in the Discord using my spreadsheet and talking about numbers, all sorts of different scenarios about how much net income and operating cash and free cash flow AMC would book under different scenarios for Q2. For me right now, there's no bad scenario. It's just how good is it going to be? Is it going to be marginally good or is it going to be excellent good? I don't know. I'm trying not to make a lot of AMC videos, though, despite all of this good news, until I see a proxy statement from the company and until I get an update on the bondholder lawsuit, which will get the next update in June, because I don't want to end up putting my foot in my mouth, getting overly bullish too early, and then one of those two events rug pulls my excitement. So I'm trying to keep my emotions in check, very closely following still the trade. And maybe I missed the opportunity to get in at $2 and change, or maybe I'll have another opportunity if there were some bad news over the next couple months. related to corporate actions, a court case settlement, or asking for more shares. But I don't know. I don't know what's going to happen. I just know that there are safer places for me over the next 30 or 60 days to put my next marginal investment dollar. I have trades in the cinema industry in stable, secure companies where my returns will be less if I'm wrong on AMC. If I should have got in at 230, well, I'd be up 50% already. That's not a bad trade. But the risk weighs heavily in my mind. And so I'm not making any broad sweeping pronouncements that AMC is secured and green flagged and green light and all clear. I'm not making any pronouncements like that on my channel until I know an update on the bondholder lawsuit, what kind of settlement, what's it going to cost, and what is on the proxy statement. What are they going to do about being out of shares? How are they viewing that risk? Because that is a strategic risk to the company. They could say, hey guys, we need to raise, we need access to more shares, but we promise not to use them. They could do that. Or they could just do nothing, right? They could roll the dice and swing the rest of this year on the belief that it's going to be all positive operating cash flow, positive free cash flow. How do I know what they're going to do? All I can do is try and look at all of the positives, all of the risks, assign probabilities to everything, and then make the decision that's right for me. And my decision might not be right for you. So do your own risk analysis, your own probability assignment, and we can all have different opinions. That's fine with me. I'm going to just keep doing my part to go see some movies and buy my wife some concessions. Vintage Vagabond, I posted in Discord this morning that I reduced my box office estimate on Karate Kid. The pre-sales and the early word on the street is that Karate Kid is not going to perform as well as initially expected even a week ago. So I reduced by $20 million my estimate on Karate Kid. Let's just pull it up. Let's do it live. Let me see if I can bring up that spreadsheet here. Hang on one second. I'll show you exactly what numbers I got here for the remaining movies, and you can laugh at them, or you can say, oh, that's what he's thinking. I see where he's coming from. And these are just my best guess based on industry information. And give me a second to get the file open, and we'll see. I've been under guessing by 20% so far this quarter, which is beautiful. I love to see numbers beat my forecast. I try and keep my forecast reasonable, and then if we beat it, that is a bonus for me. I don't mind being wrong on a conservative forecast. I don't mind one bit. I'd feel worse if I was telling you ridiculous numbers and then those numbers did not hit. The left column here is my forecast that I made at the beginning of this year and that I update weekly as for the newer movies as the forecasts change. That is what this column is. And then the right column is what the actuals is. If it was green, it beat my forecast. Like I had 185 for Minecraft. It's done 421. That is huge. It doubled, more than doubled what I had forecast. Beautiful. Red means that it did not meet forecast. But most of the reds that missed were small, forgettable movies anyways. Even The Accountant 2's only missed by 6 million. What else? Okay, so I had forecast 65 million for Mission Impossible 3-day opening weekend. It opened the 4-day weekend, or 5-day if you want to count Thursday, at 77 million. I think I was real close for the 3-day. And Lilo and Stitch, I had at 120 million. I think it came in around 160 for the 3-day, 183 total. Beautiful, beat my forecast on that. So this one I was close, this one I was low. The other big movies, I downgraded Karate Kid to 65 million. That's for the total run. I have Ballerina at 90 million. They have a very late embargo date on reviews, which is not a good sign. So I reduced my number on Ballerina a little bit. Hopefully I'm wrong on that one. I have high hopes for How to Train Your Dragon. I have it at 230 million for the entire run. Probably 100 million on the 3-day weekend, but we'll know more on that next week as some pre-sale numbers start coming in. Elio, I have at 200 million. F1, I have at 190 million. And 28 years later, 120 million. And Megan, I have at 42. The thing with these last two is they come out on June 27th. So for the end of the quarter, that gives us basically 1, 2, 3, 4, 5 days. 5 days. We'll have opening weekend, so probably half these numbers will count. And 2.4 billion is all my estimate of all of the major titles. Then you can add in slop from all of the limited releases. You can see how I get to a $2.8 billion number on the estimate. And since we're overperforming on movies like Sinners and Minecraft, we're ahead of where I thought we would be at this point. I have $1 billion left here if we add up all these movies. $1 billion of major titles that have not been released yet this quarter, so that would get this number to 2.5 billion, then add in all the limited releases and any that overperform. That's why I think 2.8 is reasonable. If any of these other movies significantly outperform my estimate, then 3 billion is in reach, but I'm sticking with 2.8 for right now. $2.8 billion. G'd productive. Oh, where do I have Superman? Good question. We forgot to talk about that one. Superman. Is that this quarter or next quarter? Next quarter, July 11th. 350 million. I don't think I've updated that number since January, and I won't have an update for it for several more weeks. But as soon as we start getting an early look at more reliable numbers, I will start talking about Q3. We're a little bit far away from me updating any numbers. I have Jurassic World at 265. Some people in the industry are thinking that's a little bit high. I don't know. All of these are subject to revision, and I have a lower number for Q3. You guys have heard me say that my thoughts about Q3 is it's a bit of a coin toss if it will be a profitable quarter or not. In my mind, it could be a break-even quarter. I would want to see this number kind of like we have for Q2. My estimate on big titles, I want to see a number like 2.4. I'm at 1.9. And we need 2.55, 2.6 to break even. So yeah, I'm not going to say Q3 is going to be a profitable quarter yet. I'm going to be optimistic and say right now it has a chance of being break even. Some of that will depend on how much carryover we get into Q3 from F1, Megan. I have some numbers from them included in my Q3. $60 million. And we could still, almost certainly will have Elio in 28 years. I probably need to add them up here also. That'll make the numbers look a little bit better. These come out on June 20th, so they're going to carry over into July for sure. And probably, hopefully, How to Train Your Dragon will still be booking, tens of millions in July. So it's not going to be a horrible quarter, but it's still uncertain to me. All right, AMC at 353, up 8%. GameStop at 34.38. Bitcoin trailing back down off of a high of almost at 111. Here in the last 5 minutes, down at 109.280. MSTR in the red now for the day. Tesla is up 5%. What do the overall indexes look like? They are still green. We got some Trump tariff news to dig in this weekend. This week, I want to look at DJT and their Bitcoin treasury. Someone asked me to look at the MSTR lawsuit, so I'm going to do that this morning. And if you guys are watching this on replay and you have other topics that are of interest for you this week, let me know. If you want to know my thoughts about GameStop again, go back and watch yesterday's GameStop video or yesterday's live stream, or the couple shot thoughts we shared here in this morning's live stream. I'll try and timestamp it a little bit later when I have time. All right, ladies and gentlemen, we are at 9:30. I was intending to do about a 1 hour market open live stream this morning. Thank you for, and we're there. We're at 1 hour. Thank you for tuning in. I'll see you channel members in the Discord. The Discord is open to everybody, guys. The link is in video descriptions. It is free for a general membership. However, most of the rooms that I participate in do require that you select one of the paid memberships for more detailed ticker by ticker analysis. And I hope to see you guys there. You supporting the channel in whatever manner by hitting that join button here on YouTube, signing up on Patreon, or clicking that link in the comments to join Discord. Your support is what enables me to keep going and provide these unbiased, logic-based, non-emotional takes on all these tickers, and hopefully help myself and you guys, if you're listening in, make unemotional, positive profit booking decisions on whatever tickers you're looking at. Good luck in your trades this week, and I look forward to your comments down in the chat.